Hi everyone. I trust all you're doing well. So, in previous lectures, we have, started new model that was startup valuation, and we have read the assumption. We have seen that how you can calculate the sales and collection value. We have done detailed discussion about COGS, then inventory and purchase, and headcount overview. We have discussed about the operating expenses, right? And then we have discussed about the capital and depreciation calculation. So here in operating expense, I think we have not written the depreciation value. So what is going to be the depreciation value here? The depreciation value is going to be that is 92,500, 185,000, and uh, 277,000 and 370,000 for coming years. This is going to be the depreciation value, right? Now, here we have calculated the depreciation value. Now, what we have to do next amount which we have to calculate is that is cash budget, right? Next value or next sheet which we have to prepare is for cash budget, right? And also we have to do detailed discussion about the balance sheet. But before we jump to the balance sheet, right, we have to do the discussion on cash budget. Now, this is important for you to understand. So listen to me very carefully and automatically you will be getting more and more clarity about this. So here, if I want to find out the cash balance, right? Ending cash balance. So what I will do here, I will do several calculations, right? I will put several values here and I will be able to find out the cash budget. Now, cash budget is very similar to cash flow statement. We have done detailed discussion on cash flow statement and those concepts I will be using here. So it is very similar to cash flow statement. I will also prepare cash flow statement. I will also prepare cash flow statement, right? But let's first start with cash budget. Now, in cash budget, what we have to do, we have to record the transaction related to the cash inflows and cash outflows, right? What we have to do here, we have to record the transaction related to cash inflows and cash outflows, right? So here, if you see, we will first record the cash receipt, right? First, we will record here the cash receipt, and after that, we will record the cash payment. Now, if I talk about the opening balance, so if you have started any business in year 2024, so obviously your opening balance is going to be zero here. Obviously your opening balance is going to be zero here. Now, what we have to do, we have to record the transaction related to the cash collected from customers, right? Now, from where you will get the transaction related to cash collected from the customers, here you have to check the sales and collection sheet. What you have to do, you have to check the sales and collection sheet to calculate the collection from customers. Now, here we will go to the sales and collection sheet, right? And here I have highlighted this ledger. So how much cash you have collected during the year? It is given, right? So in first year you have collected 95 lakh, and then in next year 1 crore 14 lakh, then 1 crore 36 lakh, right? So what we have to do, we have to carry this value into the cash budget sheet. So here, what I have done, I have brought the value of cash collection from the sales and collection sheet. So this much cash you have generated during the year from sales, right? This much cash, what you have done, you have generated during the year from sales. Now, if I ask you to calculate the total cash available before financing, right? So what we are doing, first we are calculating that how much cash we have collected from the operations, right? So here, if I ask you to calculate this, so obviously we will take the opening balance. We have to take your opening cash balance. Then we will add here cash collected from the customers. We have to add here the cash collected from the customers. So here we will press Control Enter. So once we will write down here the opening balance, right? Once we will write down here the opening balance, so we will be able to find out the total cash collected during the year. Right now, what we have done here, we have not included the opening balance, right? We have not included here the opening balance. Now, after that, what we have to do, we have to record here the cash disbursement, right? How much you have paid during the year. So here we know that when we have purchased raw material, then we have made the payment, right? Then we have made the payment for operating expenses. Then we have made the payment for asset acquisition. So these all cash payment transactions we have to record here. So if you see here in this case, purchase disbursement, right? So we have made payment for the purchase. So where you will get the amount of purchase disbursement, you have to go to the inventory and purchase sheet. If you will go to the inventory and purchase sheet here, so you will get the total disbursement for purchase, right? You will get here the amount of total disbursement for purchase. So we will select this value, right? And we will press here Control Enter. So we will get that how much amount you have paid for the purchase. So here we have done detailed calculation and we have discussed this in detail in our previous lectures, right? So if you're not able to recall, just pause this video, go and watch the previous videos, you will get the understanding about it, right? Now here we have calculated the total purchase disbursement. Now what we will do, we will put other values there, operating expenses. So what we have done detailed discussion on operating expenses also, and here I've highlighted the disbursement for operating expenses budget. So this much amount we have disbursed. Like we have first recorded all the operating expenses like salaries, miscellaneous expenditure, research and development, right? And then we found the total amount of disbursement here. What I will do, I will press Control Enter here, and I will be able to get the value of total operating expenses which we have paid. Then here we have to record the tax expense, right? So for tax expense, what we have to do, we have to prepare the P&L account. So you have to wait for some time. We will prepare the P&L account, and what we will do, we will record the tax expense here, right? Then next is capital expenditure, right? Next sheet, if you see here, is capital expenditure. So we know that how much we have paid for the capital expenditure. Here, if you see, in capital sheet, we have highlighted this, that disbursement for capital expenditure budget. How much we have paid for capital expenditure? Here you can see every year we are paying $450,000 for the purchase of capital assets. So I will take this value and this much we have paid for the capital expenditure. So is it possible for you to calculate the total disbursement? Yeah, we can find out the value of total disbursement. So we will do the total of these values. And once we will press enter here, so we will be able to calculate the total disbursement amount here, right? We will be able to calculate the total disbursement amount here. Now, what we have to do if we want to, find out the tax expense. So here we need to prepare the income statement, right? So first, what I will do, I will prepare the income statement, right? Then we will again come to the cash budget sheet. So here, let's prepare the income statement. So now it is very easy to prepare income statement. Here, what we have done, we have calculated the sales value. So from there, you will bring the sales value in sales and collection sheet. We have calculated the sales value, right? So from this sheet, we will bring the sales value. So here you can see total sales value is given, which is 1 crore, 1 crore 15 lakh. So these values we have to bring here, right? These values we have to bring here. So we know the sales value. After that, what we have to do, we have to bring the value of COGS. We have to bring the value of COGS. So here you can see COGS value is given, right? Which is 20 lakh, 23 lakh, 28,000. So I will bring this value into this sheet, right? So if I want to calculate the gross profit, so gross profit is going to be the difference between sales and costs, right? So this is going to be the gross profit here, right? This is going to be the amount of gross profit. I think you understood, right? This is going to be the amount of gross profit here. Now here you can see we have to record the salary. So from where we can get the salary transaction from operating expense sheet, we can get salary, miscellaneous expense, research, rent and depreciation transactions. So what I will do, I will bring all those values here in this sheet. So here from operating expense, what I will do, I will bring these values. So here you can see we have brought the value of salary, miscellaneous expenditure, research and development, rent, depreciation, and other expenses, right? So if I want to calculate the value of income from operation, so what I will do here, I will take the gross profit here, right? I will take the gross profit and then I will subtract here the sum of total expenses, right? So here total expenses includes salary, miscellaneous expense, research and development, and rent depreciation, right? So we will subtract this value and we will press here Control Enter, right? We will press here Control Enter. So this is the income from operation for during the year, right? This is the income from operation during the year. Now, here, what we have to do, we have to record the interest expense, right? We have to record the interest expense. And this interest expense, right, we will calculate in cash budget. So we have to wait for some time, right? We have to wait for some time. Here, if I want to calculate the taxable income, so what is going to be the formula for calculation of taxable income? It is going to be the income from operation minus uh, interest expense, right? It is going to be income from operation minus interest expense. So you will be able to calculate the taxable income here, right? You will be able to calculate the taxable income. So we do not know the interest expense, but we will calculate it. Right now, what I will do, I will apply the formula. So that is going to be income from operation minus tax expense. It is blank. That is okay. We will press here Control Enter. So here we will be able to compute the taxable income, right? Now, if I want to calculate the tax expense, so in assumption sheet, you can see that assumption is given related to the tax expense. So we can see that assumption here in assumption sheet, the assumption is given related to the tax expense, which is 35%. Right here, tax expense is given that is 35%. What company do? Company pay 35% tax on total profit. Right. So here we can see the income statement and we can link this value. So tax expense, we know it is 35% of taxable income. So here we will take taxable income and we will multiply this with the assumption sheet right here. Tax rate is given 35%. So we can press a control enter and we got here the tax expense, right? So how we have calculated tax expense from assumption sheet, we have taken 35% and we have multiplied this with taxable income. So here we got the tax expense amount. Then what we will do if I want to calculate the net income. So from taxable income, I will subtract the tax expense. And here we will be able to calculate the net income. Right here, we will be able to find out the value of net income. I think you understood, right? This is how what we have done. We have calculated the net income. Now, further, what we will do, now we will finish the cash budget here. So we know the tax expenditure amount, right? We know here the tax expenditure amount. So we can bring the tax expenditure amount from P&L account. So here you can see this is the tax expense amount. Right? This is the tax expense amount here, which is 17 lakh 94,000, 20 lakh 55,690, and 23 lakh 3,000. Right? So here we got the total cash disbursement amount. We got the value of total cash disbursement amount. Now here you have to understand this is the new concept, that is minimum cash balance desired. Right? Minimum cash balance desired. Now, every company keeps some minimum cash with them every time. We have discussed about the ending desired inventory, right? We have discussed about the closing inventory. So what company do? Company decides that how much inventory they want to carry every time with them, right? And that becomes the closing stock. Similarly, company decides that how much cash they want to carry every night, right? So let's suppose in case of emergency or in case of any contingency, right, they should have that much cash, right? So they can utilize that cash to come out of that emergency or contingency situation. So here, if you see the assumption sheet, in assumption sheet, it is given that company wants to maintain how much minimum cash we can see here. In assumption sheet, it was given the minimum cash requirement was 250,000. Company wants to maintain 250,000 every time, right? This is the minimum cash requirement. So here in cash sheet, what we have to do, we have to bring this value, right? We have to bring this value, that is 250,000. So let's see here. It is given 250,000 here. This much minimum cash company wants to keep with them. Right, this much minimum cash company wants to keep with them. Right, I have highlighted this. It depends upon the policy of company. Now, how much cash company will require? You just imagine or just try to find out how much cash company will require during the year. So here, cash received during the year is 95 lakh. How much cash company has paid during the year? That is 67 lakh, right? And here, the minimum cash desired is 2 lakh 50,000. So how you will calculate the total cash needed here, if you want to calculate the total cash needed, so obviously you will take the total disbursement, right? You will take here the total disbursement, right? Total disbursement, and then you have to add here the minimum cash balance which is required. Minimum cash balance which is required, right? So how much cash you will require, right? First, you need to assess your expenditure during the year. So here you found that this much expenditure you will do, right? You found here that this much expenditure you will do during the year. And here minimum cash balance which you require is 250,000. So is it possible for you to calculate the total cash needed? Obviously, it is going to be the total of disbursement and minimum cash balance required. So I will press your control enter, and here we found the value of total desired cash, right, which you require during the year, right? Total cash needed, which is required during the year, right? Now, here I will calculate the excess or deficiency of total cash available. Now, how you will calculate whether the business has excess cash or there is a deficiency? For this, what we will do, we will take here total cash receipt, right, or total cash available. Here we will take total cash available, and with total cash available, we will subtract total cash needed, right? Total cash needed. So here, if you see, the total cash available is 95 lakh, right? So we have not added opening stock because in first year there will be no opening stock of cash, right? Opening cash is going to be zero here. And next year definitely there will be some opening cash, right? So here if I calculate the excess or deficiency in the cash, so what I will do, I will take total cash and I will subtract total cash needed from it, right? So here I'll adjust this value. So here what we can do, we can calculate the excess or deficiency in the cash. So here I will take 95 lakh, right? Here I will take 95 lakh and I will subtract this with total cash needed. So total cash available minus total cash needed if I do. So that is going to be here 24 lakh 75,375. It means company has excess cash, right? After adjusting minimum cash requirement, here we found that company has sufficient cash with them, right? Now here we have to record the other expenditures, right? Now till now we have not done any discussion on uh, total cash needed before. Yeah, this is not required. Yeah. Till now, what we have done, we have not discussed, about the financing cost, right? We have not discussed about the financing cost here. Now, what we will do, we will make the adjustment for financing cost here, right? Now, if you see here in assumption sheet, some assumptions are given related to the financing cost. So we will see those assumptions and we will try to understand here what these assumptions says. Here, the assumption related to the finance cost is given, right? Assumption related to the finance cost or source of finance is given. So we will use those assumptions. There were assumptions. Yeah, here you can see these are the assumptions given here. Uh, Equity investment, right? Here we can see the assumptions which are given. Here assumption is given that equity investment, right? Equity investment means that when the owners, they have started the business, how much they have invested, right, from their own pocket. So they have invested 10 lakh dollars, right? They have invested 10 lakh dollars. Then they have borrowed some amount, right? In second year, they have borrowed 50,000 amount, right? That is uh, less amount which they have borrowed. That is okay. So in second year, they have borrowed 50,000. And in third year, what they have done, they have repaid this 50,000, right? They have repaid this 50,000. So they have borrowed small amount from the market, right? They have borrowed small amount from the market. And an interest rate which is applicable is 7%. Right? Interest rate which is applicable is here 7%. Right? So you can see that how much is the equity investment amount, that is 10 lakh. Here, what I will do, I will make a small change into this. Instead of 10 lakh, I will take here 1 crore. Right? And here instead of 50,000, I will take here 5 lakh. So you will be getting, much better idea because the expenditure size is going to be little high in this case. So here you can see equity investment is 1 crore, whereas borrowing is of 5 lakh, and company has repaid this amount in third year. Company has borrowed this amount in second year, and company has repaid this amount in third year, which is 5 lakh, right? And you can see here interest rate on borrowing is here 7%. So now here, what I will do, I will do the adjustment for these values in cash budget. So equity investment value is given here. So we can see the assumption sheet, and in the assumption sheet, you will find that equity investment is of 1 crore. Right? You can see the equity investment is of how much here? It is of 1 crore. So apart from this, we can see here that here company has borrowed loan of 5 lakh. Right? Company has borrowed loan of 5 lakh, and company has repaid this amount. Right? Company has repaid this amount in third year. Right? Company has repaid this amount in third year. Now, you have to understand that interest rate which is given in assumption sheet is 7%. Right? Interest rate is given here 7%. So when loan has been borrowed in second year, obviously for equity, you do not have to pay the interest. So for 5 lakh, what you have to do, you have to pay 7% interest. So here I will take 5 lakh and I will multiply this with 7%. So in assumption sheet, you can see 7% is given. So here you have to pay interest, that is going to be 35,000, right? I will start with minus sign here. So we will get negative 5,000. So you have to pay 35,000, right? You have to pay here 35,000, and you will repay this amount also, right? So if I want to calculate the total cash increase from financing activity. So what I will do here, I will do the total of these values. I will do the total of these values here. So let's do the total of these values. And here we can find out that total cash increase from financing activity. So in first year, it will remain 1 crore. In second year, company has borrowed 5 lakh. And on 5 lakh, company has paid interest, that is 35,000. So balance is going to be a 4 lakh 65,000. Then company has repaid 5 lakh. So this is going to be negative. And in fourth year, it will be zero. What is going to be the ending balance here, right? If I ask you to find out the ending cash balance. So what would be the ending cash balance here? Now, this is the important concept which you have to understand right now. Right? This is the important concept which you have to understand right now. Now, here you can see we are having excess funds, right? We are having here excess funds that is 24 lakh 75,000, right? And the owners of business, what they have done, they have invested into the business that is 1 crore. So what is going to be the total of ending cash balance here? If I want to find out the ending cash balance or how much cash company has with them, right? How much cash company has with them. So here you have to understand this thing that here we have provided adjustment for minimum cash desired balance, right? Now, minimum cash desired balance is an estimate, right? Which company wants to keep with them. Now, if you see here, company has excess cash. It means company is able to fulfill the requirement of minimum cash balance desired. Now, let's suppose, I will take a small example. Here, I will take very simple example. The cash inflows of business is cash inflows or cash sales. Cash sales of business is, let us assume, 10 lakh, right? Cash sales of business is 10 lakh and company has paid operating expenses during the year, company has paid operating expenses, let's say 95,000, 950,000. And here, what is going to be the balance cash with them? Here, what is going to be the balance cash with them? Balance cash is going to be 10 lakh minus 9 lakh 50,000. So this is going to be the balance cash here. This is going to be the balance cash here, that is 50,000. This is the balance cash, that is 50,000. Now the cash collected from sales is 10 lakh. Cash paid towards the operating expense of the business is 99 lakh 50,000. Balance cash is 50,000. Now here, as per the policy of company, right? Company wants to maintain minimum cash balance of 1 lakh. Right. Now you might be thinking how this minimum cash balance is calculated. See, minimum cash balance is calculated on the basis of working capital requirement, right? On the basis of working capital requirement of the business, right? Now, let's suppose here I'm taking very simple example. In a month, let's suppose you are running a business, and in a month, what do? You incur some operating expenses, right? Here you pay the salary of your employees, right? You pay the salary of your employees. You pay for raw material. You pay for advertisement of the business, right? You incur a lot of other expenses, and in total, how much you spend towards these expenses? In total, you spend somewhere around, let's say, 25,000 every month, right? $25,000 every month. Now here you want to keep some runway with you. You are a startup business, right? You are a startup business, and you know that in startup there are high chances of contingencies, right? You may face some unfavorable situation when you are running a business. So here, what you have to do every time you have to keep some cash balance with you, right? So if you do not have minimum cash with you, so there could be a chance that your business won't be able to survive. Right? There could be a chance your business won't be able to survive during the contingency period. So in this case, what you have to do, you have to keep the minimum cash balance with you. So your business wants to keep at least 4 month minimum cash balance with you, right? At least 4 month minimum cash balance with it, right? So here, if you will calculate the 4 month minimum cash balance. So how much is going to be the 4 month minimum cash balance here? 4 month minimum cash balance here. It is going to be the 25,000 multiplied with 4. So you require minimum 1 lakh dollar with you, right? This is how minimum cash balance is calculated. So every business has their own different policy, right? Every business has their own different policy. So here, if you see the minimum cash balance which is required is 1 lakh, but here the balance cash which is with company is $50,000, right? Balance cash with is with company is $50,000. So balance amount, what company will do? Company will borrow from the bank because company wants to keep this much cash with them, right? So here, what company can do? Company can borrow working capital loan. Right? Company can borrow working capital loan, or company can use overdraft facility. Right? Company can use overdraft facility. So this is how what company can do. Company can maintain their working capital requirement. So in case, let's suppose there is deficiency in the fund, so what company will do? Company will borrow funds from the banks or financial institutions. But here in this case, after adjustment of minimum cash balance, here we found that the we have excess cash, right? We have excess cash. Here, what we have done, we have added this minimum cash balance, right? We have added this minimum cash balance, right? But here in this case, there is no actual cash outflow, right? Minimum desired cash balance is not an actual cash outflow. It is not an actual cash outflow, right? Not an actual cash outflow. Now, here in this case, you have to understand if you want to find out the ending cash balance. So, what you will do, you will take the excess cash balance which you have after adjustment of your expenditure. You will also add the minimum cash balance, right? You will also add the minimum cash balance because it is not an outflow. It is an accounting adjustment which we have made, and we will add this 1 crore here, right? We will add here this 1 crore. So this is going to be the ending cash balance, right? This is going to be the ending cash balance here, right? Now, if I want to find out the opening balance for next year, so obviously this ending cash balance is going to be the opening cash balance for next year. So we will take this value here, right? We will take this value here, and here we got the amount of total cash collected during the year, right? We got the amount of total cash collected during the year, and again, what we have to do if I want to find out the ending cash balance, so I will paste this here, right? Here. Okay, I have not calculated this, the excess or deficiency in total cash. I will drag this value here, so I will be able to find out the excess or deficiency in cash. How we have calculated this? Here we have taken the cash available before financing, and we have subtracted this with the total cash available, total cash needed, right? So we got here the excess cash. So excess cash is of 1 crore 59 lakh, right? And here we have adjusted this amount, right? So here you can see company has not. Acha, here, instead of selecting this 1 crore, what we will do, we will select the total cash increase or decrease from financing, right? So here we do not have to select this value, which is B20. We have to select here B24. Right? We have to select this value, my bad. So here we will drag this. So here automatically, whatever amount we have borrowed, that will be added here, and we can drag this value so we can find out the total ending cash balance for every year, right? We can find out the total ending cash balance for every year here, right? So I think you understood. And here, what we have to do, we have to bring the opening balance. So the closing balance of 25 is going to be the opening balance for this year, right? So we can drag this value here and we will be able to find out the opening balance, right? And here you can see this is going to be the closing balance. Okay, you can see this is going to be the here closing balance. So here we got the ending balance. Now, if I want to calculate the ending balance, so what is going to be the formula for ending balance? We have already seen here. What I have done, I have taken the total available cash, then I have added minimum cash balance and total cash uh, available or arranged from financing activity. So here it is going to be uh, excess cash plus minimum cash plus what we have to do, we have to add the cash arranged from financing activity. Right? Cash arranged from financing activity. I think you understood. This is how we have to calculate the value. You do not have to worry, right? Because I will prepare the cash flow statement and same steps we will perform. But here, I was trying to make you understand the concept of minimum cash balance, right? So I think you understood how we have calculated these values. So remaining concepts I will discuss in next video. Thanks a lot.